Hi, it's Dwyer. I'm the editor of wealthspin.blogspot.com. I live in the Bay Area, went to school in the area where Facebook is located, and I've been following this Facebook IPO closely. I'm also someone who runs a gambling website. Let me just say, if you're an investor interested in taking risks, intelligent risks, you need to be very skeptical and very careful with this Facebook IPO. Now keep in mind, this advice is coming from someone who routinely gives advice on gambling on sports. And all I'm saying is this Facebook IPO already has the feeling of a casino type of risk. Right? I would consider the Facebook investment to carry more risk than betting on a Floyd Mayweather or a Manny Pacquiao. Let's talk about why. First, Facebook right now has 900 million subscribers. Let me ask an awfully dumb question that needs to be asked before any money is spent on this IPO. Where is the growth going to come from? Right? Assuming that many of the people on the planet are not adults, are young kids under the age of 10, right? You really have to ask yourself, can you get appreciably more than 900 million subscribers? If the answer is no, then you need to factor that in to your growth projections for the company. Right? Let me make a second point regarding Facebook. That second point is simply, General Motors recently announced that they were pulling advertising from Facebook, paid advertising, because they didn't feel they were getting adequate return on the ad investment. Now, if you have a Fortune 500 advertiser with skepticism about the effectiveness of running ads on Facebook, then how much of a premium as a prospective shareholder would you be willing to pay for that kind of uncertain ad market? Right? Understand that if you're counting on income flows based on Facebook being an ad platform, just understand that sophisticated ad buyers, at least those at GM, have concluded that at this point of its evolution, Facebook is not delivering big value for its advertisers. Right? Let me finally just point out the metrics involved. If you are an investor and you're aware of investment multiples, then you really have to ask yourself why Facebook is going at such a premium at higher multiples than Google stock is currently selling for, right? Understand Google has things like Android, an operating system that is catching on like wildfire on not only mobile phones, but also on mobile tablets and other devices, right? Not only that, of course, Google also has other features that are catching on like wildfire. Google Drive, for example, is catching on like wildfire. Google Plus, a Facebook alternative, is catching on like wildfire. So you really have to ask yourself, what is it about Facebook that commands a premium versus Google? Doesn't that beg the question of whether the premium to buy into Facebook stock is warranted? Finally, my last point. Doesn't Facebook already have competitors who threaten to challenge its market share in the long run? You've heard me mention Google right? And keep in mind, Google folds seamlessly into the Android system. But there are other social media websites that cater to specific niches. Perhaps you belong to one, right? You have social media websites for investors, for club goers, etc., etc. What is it about Facebook that distinguishes it from these other social media sites, right? For example, if I'm a businessman, what is it that Facebook offers me that social media website LinkedIn does not, right? If the answer to that question is nebulous, if it is vague and ambiguous at this point, right, then you have to ask yourself why you're paying such a big premium for Facebook. My advice is simply to be aware. Before you pay that big premium, you need to ask yourself exactly why you're paying it. Is it because you believe the 900 million subscribers are going to grow appreciably? Is it because you believe that Fortune 500 companies like GM are going to flock to the Facebook platform at precisely the time that GM has concluded that it isn't worthwhile? Right? Is it because you believe that Facebook is going to grow faster than Google, a much more diversified company with many more product lines? Right? And is it because you believe that Facebook is uniquely situated to take advantage of the social media market at a time when you have other Facebook competitors thriving in their niches? These are the questions that need to be asked. I hope you visit us at WealthSpot. I hope you visit us at wealthspin.blogspot.com. Thanks for watching.